Hey, what's up guys? Welcome back to the channel, and today we're going to be talking about the top 5 biggest mistakes that beginners make in the stock market. So I wanted to bang out a quick video for you guys that wouldn't be too complicated or hard to understand and see what the biggest mistakes are for beginners. The first one would be not having a plan at all. So before you even start investing, you gotta realize how much money you wanna have by the time you're retired or by a certain age. And to do that, you gotta see how much money you're making right now and how much money you could afford to put in the stock market. And once you determine that, you gotta see what the rate of return you're willing to get is. So I'll put a link down below to a interest compounding calculator, which is really fun to use. You put the amount that you start investing with, how much money you can afford to put every single year, and how long you want that to be invested. And then you see how much money you'll have by the time you're retired. So it's a pretty cool tool that you could use, and I really recommend it. So I'll put it right down below in the description. Another mistake that beginners can make is buying stocks because of a tip from an expert. It's a terrible way to buy stocks, and it could be a good idea in some cases, but most of the time it's not. They'll tell you to buy a specific stock, and just by laziness, you'll decide to buy it. But you won't know what the company is doing, what they're worth, or what they're planning on doing in the long run. So in most cases, it might give you a bad rate of return unless you're able to do your own research. If an expert is telling you to buy a certain stock and you know how to evaluate a company and know how to do your research on it, see what they're doing right now and what their future growth is, what they're planning on doing in the future, and matches in your portfolio and fits inside what you believe in, then by all means take the advice from the expert and blend your knowledges together to create a good portfolio. But if you're just taking it from someone on the street, or you saw that, let's say Warren Buffett bought a certain stock, it might not always be a good idea because his portfolio is completely different than yours. So just be aware of that. The third mistake that beginners make in the stock market is simply not having enough time. So it's actually really easy to get into retirement and be a millionaire if you guys start early enough, but we never do, right? And we always have stuff going on. We have, mortgages to pay, you have your rent to pay, and then if you have kids coming up, then you have to pay for that. So there's never a dull moment where you have time to save up, and there's always other stuff you're preoccupied by. But if you start early enough and you dedicate it to put money aside and invest it for your future and not spend it all right away, you'll be a millionaire by the time you retire. So check out the interest compound calculator I put in the description down below. It'll really help you guys out to see how easy it is and how little amount of money you'll be able to put aside and actually reap the benefits in the long run, depending on the rate of return that you're looking to get. The fourth biggest mistake that beginners tend to make in the stock market is actually losing money that they can't afford to lose. So they put in money, they want to double or triple their money because they have credit card debt, they have their rent to pay, and they don't have enough money. So they go and borrow money and try to double or triple it in the stock market in a couple of days to be able to pay off other things. That's a really bad idea. And first of all, it'll stress you guys the hell out. Second of all, you'll probably end up losing all your money and be even more stressed out. And third, you won't be able to pay your bills that you initially had. So don't gamble your money in the stock market. Be smart with it. Try to minimize your risk and reap the benefits. Don't try to put all your money in one basket and double or triple your money in 3 days, because most of the time it won't happen. And just because maybe it happened to a couple people out there doesn't mean it'll always happen for you. So just be aware of that. And that brings us to our fifth biggest mistake that beginners make in the stock market, and that's waiting to invest. That's a big issue that's out there. A lot of people want to invest or tell other people that they're going to invest, but just keep waiting for the market to go lower. And maybe someone around you told you that the market's gonna drop down in the next month, but it doesn't necessarily mean it's gonna happen. No one really knows what's gonna happen in a month or two of the stock market. What I would say is dabble your feet in the stock market, buy your first couple of stocks, and if the stock market does lower, you could always average cost your stocks. So you could buy the stocks for cheaper than you purchased it initially. And if it goes up, then you'll be riding the wave up and you'll be making some more money. Don't forget to diversify your portfolio and make sure that you guys are minimizing risk at the same time of trying to get the best rate of return possible. Because at the end of the day, that's all we want. And you don't want to be losing all your money in the stock market, because then it's just going to leave a sour taste in your mouth and you're going to hate it for the rest of your life. So those were the 5 biggest mistakes that beginners make in the stock market. I hope it was brief enough for you guys. If you have any questions, leave it down below, leave a like on the video, and share it if anyone could benefit from it. So thank you guys. See you in the next one. Ciao.